and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. In today's video, we're going to be looking at the Halifax Property Price Index, the housing index, and how they've just brought out a new one today. Today's the 7th of September, and they've just brought it out for August, and we've got the record highs for the average house price in the UK. I picked out some key bits of information that I can share with you, and if you appreciate me doing all this, please give this video a big like. It massively helps me out with the algorithm, and if you haven't already subscribed, please consider subscribing. On top of that, during this video, towards the end, we're going to be picking the winner for our dividend portfolio. So one of our lucky subscribers will be winning the cash dividends that we got from last video on Friday. So let's get into the video and let's have a look at what the Halifax data actually said. Nick, stick the image that I sent you up there, and as you can see, guys, the average house price is now the highest ever in the UK. It's £262,945. That represents a 0.7% growth month on month. In 1 month, the house prices have grown by 0.7%. And it's not even at all. London is still lagging massively. In fact, London shrank by 0.3% in the last quarter. So that just tells you how well the rest of the UK is doing. And I'm buying, as you know, in Northamptonshire, in Oxfordshire, in Berkshire, in Yorkshire, and I can tell you right now, those markets are all red hot. So London's lagging, everywhere else is absolutely booming. We can have a look at why that is in a minute, and I've got some really good theories, and I think I know why. But what I have done up here is I've added on this 0.7% growth. So you can see we've got this month, I've gained £21,084 on my portfolio value, which means my portfolio will now, on average, and I understand it's not as linear as this, but on average it's going to be worth approximately £3,033,084. So far since we started tracking this in July, I'm up £33,084, which is absolutely fantastic. Now, why do I think that London's lagging so much? Now, I think this is all coronavirus, to be honest. I think this is the fact that people have moved out of the city, they're looking for more space, and as you may or may not know, I run a taxi company. Now, what I'm being told by my clients is that people are starting to come back to the office. I think this is going to turn around quick. I think apartments are going to come back into favour. In some of the markets I'm looking at, you can buy a 2-bedroom apartment for £170,000 or a 2-bedroom house for £270,000. And houses have absolutely rocketed and apartments have just stayed static. I think apartments might be where the value is right now, and I have not been a big fan of apartments. Anybody who knows me, I've got 13 properties, they're all houses. I have not been a fan of apartments, but I'm seeing value now. I'm seeing significant value, so I'm going to be starting looking at some apartments. And Nick, we're actually going to go and see a couple of apartments straight after we film this video in about an hour, aren't we, mate? Yeah. So look, guys, apartments, I'm seeing value there, and I don't think it's necessarily just me that's seeing that. I've spoken to a few people who've been outside of the London market recently and they're moving back into London. I'm seeing value in apartments, not just in London though, in other towns and cities that I'm interested in. There's a few comments from the Halifax managing director. I think that's really interesting. He says all that pent-up demand from the stamp duty holiday has left the market. He doesn't see any more of that. But it's being completely buoyed by record buyer demand. And I know from personal experience, not only have I got some cash on the sidelines, but lots of investors that I know have got an awful lot of cash on the sidelines. So I'm pretty sure that's going to continue. And this was the comment that I really thought was quite interesting, that all these gains, it's highly unlikely that they're going to be reversed. And I would sort of agree with that, to be honest. I think that we're still looking at much more to run. If the average house price is £262,000, and in some of the markets that I'm operating in, like let's talk about Northamptonshire, for example, where you can buy a 3-bedroom house in Kettering still for £170,000 to £190,000. I mean, that for an average family home is not expensive. If you put down a 17k deposit, bought that on a 1.5% personal mortgage, your mortgage payment's only going to be about £300 per month. That has got a lot to run, in my opinion. I think there's so much more to run in those sort of markets. Now, if you're looking at London, if you're looking at some of the more expensive areas, I can see that affordability is going to come into it. This is, of course, just my opinion, but I can see that in some of those more expensive markets, affordability is going to play more of a factor. But these markets where we're seeing these record growth, Wales, Yorkshire, Liverpool, all these areas where house prices have been subdued for a long time, but there is a buoyant economy, there are still some exceptions to that rule, but where there is a buoyant economy, they are seeing massive growth. And I think that is where I'm going to be putting a lot of my money in the next next 12 months. Guys, that's the breakdown from the Halifax Price Index for August details, which I always do the month after as soon as it's released. And I'll be doing it next month, I think it's on the 7th of October, for September's details. And I can't wait to see how that all comes out. Now, as promised, well, first of all, what do you think of my new sign? Work hard, stay humble. We're just starting to sort the studio out. As you can see, we've got another sign here, passive income. That's going to be going up the top up there. We're in the middle of redesigning the whole lot. So I'm really, really excited to be able to improve the quality of what we're doing. Nick, come down and let's show them what the behind the scenes looks like. Come down from where you're standing. He's on top of a chair right now. Health and safety is not our forte, but we need to choose a subscriber dividend portfolio winner, don't we? Yeah. So flip it round. Should we turn a light round, or do you think you'll be able to see me on the desk?
Turn a light round.
Turn a light round, okay, let me see what I can do. So here we go, guys. I'm gonna pick the winner for our subscriber dividend portfolio. Nick, you know what I'm gonna ask you, don't you?
Yep.
What am I gonna ask you?
Command Shift 5 screen record.
Command Shift 5 screen record. You've got it, mate. I've got it for you. Here we go. So we're going to hit the start button, guys, and we're going to pick a random winner. Here we go. And the winner today is... it's KT. So KT has commented, would you invest in specific stocks as well as index funds? And if so, what ratio split would you do? Now, for me, I'm going to answer that question very, very quickly. For me, I only invest in index funds because I completely accept the premise that I'm not going to be able to beat the market. 90% of people are unable to beat the market. I believe that I will probably be one of them. So I'm quite happy to get market returns over time. That said, do I have some specific stocks? I do. I have British Land, for example, in our dividend portfolio. And that's because I wanted to have some exposure on this investment channel about property REITs. And I'm going to do another video on that very, very shortly. But Katie, get in contact, drop me a DM on Insta. I'll transfer the money over to you. And guys, everybody who's entered, thank you so much. Please enter again next month. I'm really enjoying giving away money. Next month it's going to be even more. Katie, get in contact. Guys, thank you so much for watching, and I'll see you again on Friday. Cheers, guys.